Hey everyone, welcome back to Corporate Decoder, the place where we try to make sense of all those complicated corporate filings so you don't have to. Today we're diving into JB Hunt's latest quarterly report, and trust me, even if you know nothing about trucking, there's something here for everyone. I'm talking surprising financial shifts, potential roadblocks ahead, and maybe, just maybe, a hint about where this giant is heading next. JB Hunt, one of the biggest names in transportation and logistics, just released their Form 10Q for the first 3 months of 2025, basically their report card for the start of the year. And while the headline numbers might seem a little blah at first, a closer look reveals some pretty interesting stories. Let's get right to it. First up, the big picture. JB Hunt brought in total operating revenues of about $2.92 billion. Now that sounds like a ton of money, but here's the thing, it's actually slightly less, about 1% less than what they made during the same time last year. That means they earned slightly less money this quarter. Where did all the money go? Well, their operating expenses also decreased slightly. Salaries and wages being lower by about 1%. Even with those lower expenses, their operating income, or profit from operations, took a bit of a hit, going down about 8%. That means less money is trickling down to the bottom line, ultimately resulting in lower net earnings of about 76%. To put it in even simpler terms, their basic earnings per share, which tells you how much profit the company makes per share of stock, was $1.18 compared to $1.23 last year. So for every share you own, the company made less money than they did last year. Now let's check their balance sheet. This is like a snapshot of what the company owns, its assets, and what it owes, its liabilities. Total assets were about $8.26 billion. On the other side, total liabilities, or what they owe to others, came in at about $4.3 billion. Finally, shareholders' equity, which is assets minus liabilities, representing the owner's stake in the company, sat at around $3.87 billion. Those are the overall numbers, but let's take a look at how each of their business segments is doing. JB Hunt breaks down their business into 5 main areas. First, there's intermodal, called JBI, which involves moving freight containers between different modes of transportation, like trains and trucks. JBI's revenue increased by 5% and its operating income decreased 7%. So JBI is moving more freight but making less on each load. Next, dedicated contract services, called DCS, which is all about providing customized transportation and logistics solutions for specific customers, kind of like having their own private trucking fleet. DCS revenue was down by 4%, as was operating income down 14%. They were getting less money and it was costing them more. Then there's Integrated Capacity Solutions, ICS, which is basically freight brokerage connecting shippers with available carriers. ICS segment revenue decreased 6%, but their operating loss improved. So in this segment, they lost less money but made less overall. Final Mile Services, or FMS, focuses on the last leg of the delivery process, getting goods from a distribution center to the customer's door. FMS segment revenue decreased 12% and operating income decreased 69%. This was a tough quarter for this segment. Lastly, Truckload, called JBT, handles traditional over-the-road full truckload deliveries. JBT segment revenue decreased 7% while operating income actually increased. They hauled less but made more, so more efficient overall. Another really useful part of these reports is the cash flow statement. This tracks the actual cash coming in and out of the company. Net cash provided by operating activities was $404.2 million. That's a lot of money, less than last year, but still quite a bit. What were they doing with all that cash? Well, they used some of it for investing activities, mostly buying equipment, and some for financing activities, including buying back their own stock and paying out dividends. They also got a good chunk of money from debt issuance while paying for previous lines of credit. Speaking of debt, let's take a quick look at their financing arrangements. At the end of March, they had about $1.4 billion in senior notes, which are basically loans they've taken out, and they were authorized to borrow up to another $1 billion through a revolving line of credit. So they're not afraid to borrow money to fund their operations and growth. Of course, no report would be complete without a section on potential risks and legal issues. JB Hunt mentions that they're currently appealing amounts owed as the result of state use tax audits. They also carry insurance coverage to help cover costs related to accidents, but sometimes their claims exceed the coverage limits, and like any big company, they're involved in other claims and lawsuits that come up in the normal course of doing business. JB Hunt is clearly organized into 5 main business segments, the first 3 being the most important. As we can see by their balance sheet, the company understands what they are doing and executes properly. One quick note, when looking at how a company takes care of its employees, you can look for share-based compensation. JB Hunt spent more than 18 million in that area. This gives employees restricted shares in the company as part of their compensation. Lastly, they've been buying back shares and paying out dividends. The board of directors declared a regular quarterly cash dividend of $0.444. They bought back approximately 234 million worth of common stock. This can potentially create more value for their shareholders. Of course, no business is without risks, and JB Hunt is no exception. Their report details a whole bunch of factors that could potentially impact their financial results. These include things like economic conditions and the operations of their customers, and third-party suppliers and service providers can seriously harm JB Hunt. The leaders of the company also said that their financial and operating procedures are solid and are working as intended. So what's the overall story here? Well, JB Hunt is facing some headwinds, but it's not all doom and gloom. Their intermodal business is still going strong and they're managing to improve efficiency in some areas. However, they're also dealing with decreased customer demand and increased expenses in other segments. While the numbers are not catastrophically bad, you can tell that they are under pressure. The numbers are just okay for what a giant like JB Hunt should be doing. There's definitely room for improvement and growth, and their leaders and processes seem to be in check. Ultimately, JB Hunt still maintains a leading position and is still one of the most important delivery and logistics company in the US. Thanks for watching. If you found this decoder useful, make sure to hit that like button, drop a comment with your thoughts, and subscribe for more corporate deep dives.